Right. The retained income at the beginning of the year. Here is our retained income. At the beginning of the year, what was the balance of our retained income? 950,000. There we are. You simply say retained income at the end of the year is 950,000. Net profit after tax. You see, it is important that you use the amount after tax. The mistake that most of you make is that instead of using the amount after tax, you use the amount, the net profit before tax. Now, we have been told, we have been told that our net profit for the year is how much? We are told that the net profit before the year, before tax, net income before tax for the year is 1,700,000. So you have that, 1,700,000 is before tax. Then you must subtract the tax. We did that when we did the appropriation account. Appropriation account, we said our income tax, the 30% is 510,000. Then you must say minus 510,000. Now you see have your 1,700,000 minus 510,000 is equals to 1,190,000. Okay. The other way of doing this, remember, this 530,000 is the 30% of the tax. The other way of making this calculation, you can simply say 1,700,000 multiplied by 70%. Multiply by 70%. That is after subtracting the 30% of the tax. Now you will see, when you say 1,700,000 multiplied by 70%, which is 0.70, it gives you the same amount of 1,190,000. Right. The next step is to now to calculate the retained income for repurchase of shares. How many shares were repurchased? 60,000 shares. Then you have your 60,000. You reduce your retained income by the difference between the repurchase price and the average price. Remember, we said these shares were repurchased at 7 rand. Now we say 7 rand minus 140, 540, multiply by 7 rand minus 540. We had already determined that is 1 rand 60. Therefore, you say 60,000 multiply by 5 rand 40, and that gives you 324,000 that you must subtract, because you say you must reduce retained income. Then you must get your dividends. Your dividends, you are going to have your interim dividends and your final dividends. We had made this calculation somewhere. For interim dividends, we said is 700,000 shares multiplied by 20 cents. Remember, we said an interim dividend of 20 cents was declared. 700,000 multiplied by 20 cents. 700,000 multiplied by 20 cents is 140,000. Here we say the final dividend was 700,000 multiplied by the final dividend. We say a final dividend of 60 cents. A final dividend of 60 cents. Here we multiply by 60. And then we said 700,000 multiplied by 60. And then it gives us 420,000. That will give us 560,000. And that also must be subtracted. You will see that this calculation on dividends is exactly the same as our ordinary share dividends account, where we had 140,000 and 420,000. It gave us 560,000, and the appropriation was 560,000. It's just that here we put it in a form of a statement. Now, in order to get retained income at the end of the year, you say retained income at the beginning, add net profit after tax, minus amount paid for repurchase of shares, minus amount for ordinary share dividends. It will give you retained income at the end of the year. Therefore, you will say 950,000 plus 1,190,000 minus 324,000 minus 560,000. That will give you 1,256,000. It gives you 1,256,000. Learners, that is we have come to the end of today's lesson. As you can see, it is very important that you know how to prepare both the ledger accounts and the retained income note. All right. See you on Monday, when we'll be revising the income statement as well as the income statement as well as the note on fixed assets. Please make sure that you attend the classes that have been organized for you, so that you are able to be prepared for the test. That will be the exam that will be writing at the end of on the 18th of February. Thank you.